This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall during yesterday's report, I mentioned how we might use this candle wick right here for any short trades. The pair has sold off since that report. However, as I was mentioning during yesterday's report, we needed prices to come up a little bit to get a favorable risk-reward entry. That didn't happen. So right now, if you don't have any position, I would recommend continuing to stay flat. Look for prices to move up towards that 88 figure, where we might look to short, placing our stop just above the high of this candle wick right here, right in the 88.70 area. The next chart is the Aussie Kiwi, and not much has changed here. As I mentioned during yesterday's report, I was speaking about taking all your profits on the long trade, possibly holding just a portion for prices to get up to that longer term resistance line on top here that I'm pointing at right now. And we can see the prices have already begun to sold off a little bit. What I would do here, if you do have still a little bit of that position open, I would right now close all positions and then just be flat and wait for prices to come up near that resistance line, where I would look to short with a stop maybe 50 to 75 pips above the resistance line. The next chart is the Pound Swiss, and not much has changed here. Still just waiting for prices to come down and hit this longer term support line. With that being said, let me zoom in a little bit here. I can highlight a short-term opportunity. This candle right here has a very long wick. We might use that as our reference point, and we can see that price about the 77.10 area, maybe placing a stop in the 77.25 area. So right now, with prices near 76.75, we might look for prices to get near that 77 area and maybe place a stop again about 25 pips or 50 pips above that area. Now, this is a low confidence trade idea, but this is a very important point that I want to get across here, is that it really doesn't matter in terms of being confident in the trade. The most important component of any trade would be the risk to reward. So let's say we do risk about 50 pips here on the entry, but the upside here is at least 600 or 700 pips on the upside. So that's the important thing to keep in mind. The confidence in terms of the trade idea, you want to watch out for being obviously too confident, because that makes you take wild risks. But this is a good example. I don't have a lot of confidence in this trade idea, but the levels are setting up where I can enter with a very favorable risk to reward ratio, and that is the purpose when looking for trades. The next chart is the Euro Swiss, and we've had a little bit of a sell-off here. Again, I'm still just waiting for prices to come up and actually hit that resistance line. They got within a few pips here, depending on your individual risk parameters you might have entered. If you are short now, I would just continue to hold this trade, again placing a stop about 50 to 75 pips above this long-term resistance line. If you don't have any position, what I would do now, similar to the other trades, is just wait for prices to come up and hit this longer-term resistance line. Again, we'd look to enter at the resistance line with a stop maybe 50 to 75 pips above the resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.